It's Monday, the 14th of September 2020. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Victoria's government starts spending in a bid to kickstart its economy as new COVID-19 cases fall. That's our main story. Also coming up in today's podcast, Rio Tinto's boss loses his job, but is it enough to allow the company to move on from its Juukan Gorge disaster? National Australia Bank outlines its plan to reinvigorate the economy, and get ready for one of the weirdest annual general meeting seasons ever. Later in the podcast, I talk to the always insightful Stephen Koukoulas about how the economy is travelling. But first, here's a brief look at markets. Wall Street ended last week lower, with each of the three main indices recording their second straight negative week of trading. Many tech stocks, which now dominate Wall Street, closed lower. In fact, the sector had its worst week since March. European markets were fairly flat. The significant market mover in that region is the British pound, which is losing value against other currencies on the back of Brexit deliberations. The S&P ASX 200 finished lower on Friday at 5,859 points, taking the full week loss to 1.1%. That's 4 weeks in a row of losses across the index. Wesfarmers, Woolworths and Transurban were among the worst performers. Oil prices were flat over the weekend and gold was down a little. The Aussie dollar is buying 72.8 US cents. I'm starting to sound a bit like a broken record when it comes to the currency, 72.8 US cents. The total number of coronavirus cases worldwide is now 28.8 million, with 921,000 deaths. The Victorian government has announced a $3 billion cash flow support package for small and medium-sized businesses, many of which haven't traded normally for more than 6 months. Sectors to benefit include accommodation, tourism, museums and galleries, hair and beauty services, adult education and healthcare. Premier Daniel Andrews indicated he'll spend up to $18 billion in total to get the state working again. Infrastructure projects are likely to get a big boost. The Premier got a rare tick of approval from the Prime Minister Scott Morrison and from Melbourne Lord Mayor Sally Capp. There were 41 new cases in Victoria yesterday after 37 on Saturday. Most of the cases are now coming from health and aged care facilities. Say what you like, but the hard lockdown is working, at least in health terms. Melbourne's 14-day average is on track to shift below 50 at some point this week, which is the trigger to reopen some metro businesses in the construction and manufacturing sectors. Regional Victoria is also close to the point of allowing cafes and pubs to reopen. Big business will be happy. The bosses of CSL, Wesfarmers and BHP are all in the Australian today calling for an easing of border restrictions. Meanwhile, drug giant AstraZeneca has resumed human trials of a potential vaccine after pausing following one patient falling ill. Australia has done a deal with AstraZeneca to manufacture 30 million doses of the vaccine if it's proven to work. Federal Health Minister Greg Hunt said there was genuine hope and optimism that a vaccine will be available in the first half of next year. In a moment, the rest of the news you need to know this morning. Well, it's not often I have a new Fear and Greed podcast to tell you about, but that's certainly the case today. You might have even already found it in your playlist. It's called Fear and Greed's The Week Ahead, and as the name suggests, it's a pretty handy guide to the major events, reports and releases that give insight into the economy this week. It features our regular guest Stephen Koukoulas, who'll be back every Monday to go through what the events are and why we need to be prepared for them. Check out The Week Ahead now on the Fear and Greed playlist. Overseas news first up. The wildfires in California are very threatening. If you haven't seen them, it's worth looking for the footage. President Trump will visit the state today. The Democratic-leaning California and Mr. Trump do not get on. The state has continually sued the president over his policies. Also, wildfires trigger climate change debate, something Joe Biden, Mr. Trump's challenger in the November poll, is very strong on. The Taliban and Afghan government began peace talks in Qatar over the weekend, aimed at creating a power-sharing government. If successful, it'll be the first time since 1979 that a new government has been established without bloodshed in that country. Chinese and Indian officials met in Moscow over the weekend and agreed to de-escalate tensions on their contested Himalayan border and to try and restore peace and tranquility. China President Xi Jinping will also hold a video conference with German Chancellor Angela Merkel and other European leaders as both regions look to reset their relationship amid a deepening China-Europe rift. Locally, Rio Tinto Chief Executive Jean-Sébastien Jacques lost his job on Friday over the destruction of 46,000-year-old rock shelters and paintings in the Juukan Gorge in Western Australia back in May. Rio had ignored the wishes of the Indigenous owners of the land and detonated explosives to access 80,000 tonnes of iron ore to sell offshore. After months of shareholder pressure, the board of the miner finally terminated Mr. Jacques and two of his direct reports over the calamity. It's surprising it has taken this long. No matter what the fallout for Rio executives, Australia has lost part of its cultural heritage. Chair Simon Thompson said Rio, which has been run out of London since 1995, will bring more jobs back to Australia, where the vast majority of its revenue and profits come from, and is likely to run more of its business from Perth. Rio's share price fell after the announcement. Seven West Media has told Cricket Australia it's in breach of its $450 million broadcast deal and will terminate its contract for the upcoming summer. Apparently, Seven has given Cricket Australia 2 weeks to fix the breaches. Nine, who let the rights go in 2018, has already said it's interested in picking them up again, although it's not clear whether Seven's ploy is a way of reducing the amount it has to pay Cricket Australia or whether it really will walk away. Media reports this morning say Foxtel is also pushing for a discount on its $600 million rights deal, saying a shortfall in quality, particularly in the Big Bash League 2020 tournament, entitles it to a discount. New South Wales National leader John Barilaro was under pressure to step down after his extraordinary announcement last Thursday that the state Nationals would sit on the crossbenches but keep their ministries in the state. This was followed by a backdown of momentous proportions just 24 hours later. Coalition partner and Premier Gladys Berejiklian, without any hint of irony, said she would work with whoever led the Nationals and was up to that party to determine who that person was. National Australia Bank Chief Ross McEwen was before a parliamentary inquiry on Friday, and he called for political leaders to develop a uniform approach on reopening borders and keeping them open. He said the federal government needed to bring forward tax cuts, accelerate infrastructure spending, reduce red tape, and start thinking about restarting immigration. It's not a bad blueprint, and I'm sure we'll see some of it in next month's Commonwealth budget. Mr. McEwen also spoke of the surge in cybercrime. Hackers and criminals are making the most of the shift to digital banking during the pandemic, increasing cyber attacks. He said in the first 6 months of the year, just 6 months, the bank blocked 458 million cyber attacks. Suncorp said it would axe up to 550 jobs after deciding to close 20 branches last week. It won't be the only business cutting jobs over the next few months, I can assure you of that. Annual general meeting season is about to kick off, and there won't be scones and tea this time around. Most meetings will be virtual, with Telstra to lead the way, hosting its 1.2 million shareholders on 13 October. Of course, nowhere near that number will tune in, but it's quite a logistical challenge to work out how to allow thousands of shareholders to watch, vote, and comment. Many big companies are encouraging shareholders to send their questions in before the meeting. They can then be collated, and the most frequently asked will be answered. In most cases, shareholders can also ask questions in real time. Remuneration reports often get the most attention at shareholder meetings, and it's not clear whether the lack of crowd momentum will help or hinder boards trying to push through pay deals for senior executives. One saving grace for many shareholders, they can always just log off when they've had enough. A story in the Australian Financial Review this morning says that Australia's richest man, Andrew Forrest, and his team narrowly avoided being caught up in a deadly terrorist attack in Kabul last week. Mr. Forrest's key contact was targeted by terrorists. While the contact survived, 10 other people were killed. Mr. Forrest was unhurt. The Fin is also running a story about a Chinese military contractor that boasts of spreading disinformation and promoting conflict, having a database of more than 35,000 Australians, which includes figures from politics, law, and the military. Not surprisingly, auction clearance rates in Melbourne fell to a record low over the weekend, 27%, and there were only 14 homes listed for auction. That means 4 houses sold. In Sydney, the auction clearance rate was a solid 70%. We've spoken quite a bit about China inquiring whether Australia has dumped barley and other commodities into its market. But we have also started our own dumping investigations into Chinese goods such as tubes, aluminium products and steel roofing. We already apply duties on many Chinese steel and aluminium products, something the Local Productivity Commission has questioned. Our investigations are doing very little to help Australia-China relations, and local importers are experiencing volatility in supply of goods, and that makes it hard to run a business. Finally, this morning, Sigma Healthcare sales fell 13% for the 6 months to the end of July, hurt by the loss of a contract to supply Chemist Warehouse and the COVID-19 downturn. Sigma is a wholesaler of drugs as well as owner of several pharmacy chains, including MCAL and Guardian. Net profit was $4.7 million, up from $2.5 million 12 months earlier. Underlying profit, which strips out one-offs and abnormal items, was down 5%. Every Monday morning, we like to talk economics, and this morning we've got one of the best in the business, Stephen Koukoulas. Stephen's previously been Chief Economist at Citibank in Australia, Head of Global Research in London for TD Securities, and a Senior Economic Advisor to Prime Minister Julia Gillard, also becoming a regular on Fear and Greed. Stephen, good morning.
Good morning, Sean.
Let's start talking about housing. So over the last week, we've had a bit of data out, also commentary from some senior bankers still expecting the housing market to fall fairly sharply, and certainly auction clearance rates in Melbourne have fallen off a cliff. What's your take on the housing market? I suppose it's a two-speed economy.
It depends where you are. This is the interesting thing. We don't have one Australian housing market. And as we're seeing, as you mentioned, with Melbourne versus other capital cities and even the regional areas, it's really very, very interesting. The housing finance numbers that came out last week were strong. There was a big increase in borrowing. First home buyers were stepping up to the plate, as they say. So we've had the issue of home ownership sort of hanging over the Australian housing market for a decade or two now. So is this the opportunity that those who are lucky enough to still have a job, taking advantage of what's a weaker market generally, and with very, very low interest rates, are people stepping up? That certainly seems to be the case. And so when we look at the weekly data out of CoreLogic with their house price series, we can see that, again, another curious thing, yet Melbourne's weak. Prices are down. They're falling, around about 1.5% on a monthly basis. But Adelaide, Perth, Canberra, Hobart, Brisbane, they're all flat or actually going up a little bit. So it's a really diverse market we've got for house prices in the housing sector more generally.
You mentioned first home buyers. How important are they to the market?
Look, they're really important. We've often got three broad categories in housing. It's investors, who we all know and love to hate or hate to love or whatever. We've got first home buyers, and we've got people upsizing, getting a bigger house or downsizing as they get older. So one of the missing ingredients in the housing market in recent times has been first home buyers dropping away. Affordability issues were a concern, access to finance, saving that 20% deposit when interest rates are very low and house prices are going up was a real challenge. But again, if they can sort of step up to the market, if they can take advantage of stunningly low interest rates, and just over the course of the last 10 days or so, I've been chatting to a few of my mates in the banking sector, and they're saying that, well, the banks are being pretty cautious in their lending, of course, in the era of high unemployment. They are willing to lend to people with a sound job and people who, for example, have some employment history and have managed to scrape together that deposit. They are really stepping up, borrowing a large amount, so the mortgage levels have increased, the average loan size has increased, but the mortgage servicing cost, when you plug 2.5% or 2.75% mortgage interest rate into your mortgage calculator, you're actually doing okay.
If you want to hedge your bets there, you do part floating, part fixed rates, and you really do have long-term low interest rates.
Well, that's a staggering thing. And when we listen to what the Reserve Bank have been saying, and it's pretty obvious from how the economy's panning out, that they've indicated, and the fact that they're buying and targeting the 3-year government bond yield at 0.25%, so same as their target for the official cash rate. Dr. Lowe, the RBA governor, effectively said that he doesn't expect to be hiking official rates for about 3 years. Hopefully it's sooner if the economy's stronger, and if that's the case, great. But being realistic now and thinking, well, how long is it going to be before we actually get back to full employment, before we get the economy growing, before we get inflation back into that target range? And I think most forecasters out there are saying it'll be at least a couple of years. So, yeah, you're quite right. You can probably take the floating rate mortgage and be pretty content. You're not going to be blown out of the water. But again, there's some very attractive fixed rate products out there.
Now let's move on to consumer sentiment. Numbers came out from Westpac Melbourne Institute. What did they show?
A big jump in consumer sentiment. I think it was up 18% in the month. So consumers are less pessimistic. I think the absolute level of sentiment was still below that 100. There's an index that they use. And when it's above 100, on average, consumers are optimistic. Below 100, they're pessimistic. And of course, when the lockdowns were in full steam nationwide, we had the index into the 70s. So it was well below 100 and we were all feeling pretty gloomy and pretty miserable. It fell again when the Victorian lockdown started, but this month, the figures that were put out by Westpac and the Melbourne Institute showed a big jump. So in a sense, I think people outside Victoria are probably feeling reasonably content with their lot. But the index level is still at about 93 index points, so still below 100. But it's, again, a little bit of an encouraging sign that perhaps if we open up a bit, we are allowed to go out to pubs, clubs, restaurants, sporting events, the arts and these sorts of things, that sentiment can pick up a little bit.
Why is sentiment so important? Why does the Reserve Bank Governor and the government care so much about sentiment?
Well, it's interesting because the RBA mentioned consumer and business confidence an awful lot in their analysis of the economy. And it's one of these things that there's a reasonably good correlation between how we as consumers are feeling and how much we spend. So if we're feeling optimistic, say, we've got a job, we've got a pay rise, our house is going up in value, our super portfolio is going up in value, we're feeling pretty good. So when you're asked about your consumer sentiment, you say pretty good. And there's a correlation between that optimism and how much we're spending. Because if we're feeling confident, we've got some financial security behind us for all those reasons I just mentioned, you're probably going to be more inclined to spend. So there is this link between the level of sentiment and consumer spending. And obviously right now it's sentiment down, even though retail sales are doing okay, aggregate household spend, which includes spending on services and the like, is still very weak.
Presumably house prices feeds into that as well as having a job. Stephen, thanks for talking to Fear and Greed.
Thank you.
That was Stephen Koukoulas. If you want to follow Stephen, start with his website, thekouk.com. That's THEKOUK.com. There was a lot more to my conversation with Stephen that we just couldn't fit in. In the extended interview, we look at the link between consumer sentiment, employment, and house prices, something known as the wealth effect. Stephen also tells us what he thinks should be in the federal budget coming up on 6 October. For anyone interested in the macro view of the economy and the impact on business, it's great listening, and it's available now as bonus content. There's been a flurry of great reviews and recommendations coming through on Apple Podcasts, on Facebook, on LinkedIn, everywhere. This one comes from Pat, listening in Canberra. He says, "This podcast has truly changed the way I start my day. It gets the noggin working on the drive into work and helps me start my day on the right foot. Do yourself a favour, subscribe or follow this fun, informative, contemporary podcast." Thank you, Pat, for recommending us to your friends and colleagues. We're an independent podcast, so we rely almost entirely on the word of mouth generated by listeners like you. To everybody else listening, be like Pat and spread the word. In return, I'm going to start to use the word noggin more often. Last week I mentioned that Scottish-born Jane Fraser had been appointed to run Citigroup. It's the first time a woman has gotten the top job at a Wall Street bank. There's a great story in the Telegraph of London about how the 53-year-old handled sexism in her career. Well worth looking up. That's it for today. Let's hope those coronavirus numbers in Melbourne keep falling. It's Monday, the 14th of September 2020. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.